Welcome to TalkTickers. Today, we're jumping right into the latest earnings call. Let's break down what happened.
Absolutely. So first quarter revenue came in at $1.015 billion.
Okay.
That's up 3% year over year, or actually 4% if you look at constant currency. And non-GAAP operating margin was pretty strong, came in over guidance at 30%.
30%, nice.
Yeah.
So keeping costs in check while growing. What about earnings per share?
Yeah, non-GAAP EPS hit $1.70. That's better than the high end of their own forecast.
Oh, really?
Yeah, and it's up 4% year over year, 6% in constant currency. So solid bottom line beat too.
Okay, good numbers then. Where did most of that performance come from? What were the sort of the engines?
Well, the real story continues to be security and compute, those two together. 69% of total revenue.
69%, wow.
And they grew 10% year over year, 11% constant currency. So that's clearly where the momentum is.
Right, that shift away from just delivery continues. Let's dig into security first. What's happening there?
Security, yeah. So Guardicore, their segmentation solution seems to be getting a lot of traction.
Segmentation, okay.
Driven by, compliance needs, obviously, but also just defending against malware, ransomware, the usual suspects. What's interesting is its focus on internal network segmentation, that zero trust piece.
Right, protecting inside the perimeter.
Exactly. Seems that's hitting a nerve where maybe older stuff hasn't kept up.
And are they winning new deals with it?
They are. They highlighted some pretty significant competitive wins, mentioned a major U.S. bank, a European government, a revenue and customs body, a clinical research lab, and a major credit union. And the feedback was interesting, basically. The old solutions weren't cutting it, and Guardicore was easier to manage, unified control, that sort of thing.
Makes sense. So new logos, but what about existing customers? Are they expanding?
Yep, that too. They saw expansions with, a financial analytics firm, a Fortune 500 manufacturer, and a big telco. That kind of growth within the base is always a good sign, right?
Right. Definitely shows stickiness. Now, API security, that's been huge lately. How's that area doing, protecting those connections between apps?
Oh, yeah. API security is still a major growth engine. They rattled off wins across fintech, banking, pharmacy benefits, insurance, auto, retail, investment banking, pretty much everywhere.
Right.
Got some recognition at a big conference too, RSA, I think it was.
Seems like APIs are core to their strategy. Anything else new on the security front?
Yeah, the big announcement was this firewall for AI.
Firewall for AI. Okay, tell me more.
It's basically a security layer built specifically for AI risks. Think protecting LLMs, AI agents, the APIs they use, from things like data leaks, model backdoors, data poisoning, even AI-driven denial of service attacks. It's new, but they said customer interest is strong already.
Definitely timely.
What about their traditional WAF, the web application firewall? Still relevant.
Very much so. Forrester actually named them a leader in the latest Wave report for WAFs. Top scores in several areas.
A good validation. And they landed some big WAFAF deals too, multi-million-dollar contracts with a global bank in India and the world's third largest railway. So still a core piece.
Okay. Now, I remember hearing some buzz about international customers being maybe hesitant about US-based cloud services. Did they touch on that?
They did address it, yeah. Basically acknowledge the concern, but stress their long-term commitment and, frankly, the lack of comparable alternatives, especially in security.
Fair point. Back to Guardicore for a sec. What makes it stand out, according to them? Why are people choosing it?
They highlighted three things. Scale, ease of use, mentioned an AI interface, making it simpler, and just trust.
Trust, yeah, that's big in security.
Right. They admitted it might cost more than some competitors, but argued it's reliable, especially when you're protecting critical stuff.
So Guardicore is really the heart of their zero trust approach then?
Pretty much. It's the flagship, and they're integrating other bits around it for that comprehensive enterprise protection.
Got it. And the actual security revenue number for Q1, how did that land?
Okay, so reported growth was 8% year over year. But in constant currency, that was 10%.
10%, okay.
They did mention some noise from license revenue timing, but said the underlying growth in API security and Guardicore was really strong, enough to offset slower growth in mature products like Way.
And looking ahead for security, what's the outlook?
They seem confident, sticking to their full-year guidance of around 10% growth for security.
Okay.
Driven by that demand for segmentation, API security, and the potential they see in the new AI Firewall. They expect ARR for Zero Trust and API security combined to grow 35%. And since so much of security is recurring, they feel they have pretty good visibility.
Makes sense.
Oh.
Okay, let's switch gears to delivery. That's been the tougher spot, hasn't it?
It has, but Q1 was actually better than they expected for delivery.
Oh, how was that?
Better traffic growth, apparently. Strong performance for web apps, live events. And they mentioned contributions from the EGEO acquisition finally kicking in.
Oh, Tejo.
Yeah, they even signed a big $16 million 3-year deal with a new EGEO customer that bundles delivery with API security and compute. So some synergy there.
Interesting. So the EGEO integration is paying off.
Seems like it's starting to. Overall delivery revenue was still down 9% year over year.
Right.
But it beat their forecast. And they pointed out it's been sort of flattish sequentially for 3 quarters now. So maybe stabilizing. They sound cautiously optimistic.
And what drove that Q1 upside? Was it pricing finally improving or just more volume?
They were clear it was traffic volume, not pricing. Said it was pretty broad strength across different types of delivery customers, too.
Okay. What about pricing going forward? Still under pressure?
Sounds like it's still mixed. Maybe some stabilization with the big media guys, but pressure elsewhere, like in commerce. They expect the usual trade-off, higher volumes, lower unit prices.
Right. And the EGEO cross-sell, getting those new customers onto their security and compute.
Huge potential there, they said. Hundreds of new customers who mostly didn't use their other stuff before. But they also said, look, it takes time. Migration first, then building the pipeline won't happen overnight.
Understood. Okay, let's talk compute. That seems to be where a lot of the excitement is. What's new?
Yeah, compute's got definite momentum. New features like Akamai Cloud Inference.
Right, for AI.
Exactly. Plus new customer wins, and they're expanding how they sell, bringing in ISV partners more.
Tell me more about cloud inference. What's the pitch?
They're saying it's just a better architecture for AI stuff, especially data-heavy things at the edge. Faster responses, lower costs than hyperscalers. They even shared some proof of concept numbers.
So it's designed differently?
Yeah, built specifically for AI workloads close to the data source, not just general compute like the big guys offer.
Makes sense. What kind of customers are signing up for compute?
It's pretty diverse. A global streaming service, a big cybersecurity firm, a European industrial company, a game developer, plus significant deals through those ISV partners, a major retailer, a pharmacy benefits manager.
And they're getting noticed for this AI infrastructure push.
Apparently so. Gartner called them an emerging leader for Gen AI infrastructure. They partnered with Vast Data, too, for AI inferencing. Also launched a managed container service across thousands of locations and new accelerated compute instances with VPUs, that's video processing units, aimed squarely at media companies. Lots of synergy with media ISV partners there.
So the overall message is their combined platform delivery, compute, security is a real alternative to the hyperscalers.
That's exactly their argument. Especially for media and entertainment. Lower cost, high performance, scalable, and crucially, they stressed, unlike the big cloud providers, they don't compete with their customers.
That's a key point for media companies. What were the actual compute growth numbers?
Revenue hit $165 million. That's up 14% year over year, 15% constant currency.
Solid.
And looking ahead, they expect ARR for cloud infrastructure services, that's the core part, to grow 45% next year. That's what's driving the overall compute growth.
Right, because they're winding down some older compute services.
Exactly. Getting out of things like video transcoding, image management, that's playing out as planned, so the growth is really concentrated in those cloud infrastructure services now.
And long-term for compute?
They see it as a major sustained growth driver, aiming for something like 20% growth over time, all fueled by that cloud infrastructure expansion.
Okay, let's shift to the overall financials and the guidance. Key points there.
All right, so Q1 non-GAAP net income, $256 million. CapEx was $226 million, maybe a bit lower due to timing, but they expect it to be front-loaded this year. Big share buyback in Q1, $500 million spent. Still have $1.5 billion left on the authorization. And after the quarter ended, they paid back $1.15 billion in convertible debt.
Got it. And EGEO, sounds like that integration is mostly done financially.
Yeah, customer migration complete, no more transition costs expected.
Yeah.
And they're projecting $85 to $95 million in revenue from EGEO for the full year.
What about operating expenses going forward? Any pressures there?
Yeah, expect OpEx to tick up in Q2. Partly weaker dollar, partly higher marketing spend events, sales trips, and also annual raises kicked in April 1st.
Okay.
Also warned interest income will drop through the year. Lower cash after paying debt, plus potentially lower rates. About a $5 million per month hit starting in May.
And they're keeping their guidance ranges pretty wide.
They are. pointed to the scale of the business, economic uncertainty, FX swings, and the potential TikTok ban impact as reasons for caution.
Right. So what is the actual guidance? Q2 and full year.
Okay, Q2 revenue. $1.012 to $1.032 billion. That's 3.5% growth. See a positive FX impact there.
Okay.
Full year 2025 revenue, $4.050 to $4.2 billion. That's 1.5% growth, with those factors we mentioned potentially pushing it around.
And they're sticking to the growth targets for security and compute within that.
Yes. Reaffirmed about 10% constant currency growth for security for the year, with that 35% ARR growth for Zero Trust and API security, and compute still aiming for around 15% constant currency growth, driven by that very strong 40-45% ARR growth in cloud infrastructure.
And profitability for the year, margin, EPS.
Full year non-GAAP operating margin expected around 28%. CapEx guidance is 19-20% of revenue, and full year non-GAAP EPS projected between $6.10 and $6.40.
Okay.
They also talked about cost discipline, sales transformation being on track, about a third done, focusing more on new customer acquisition for security and cloud.
Any hints on how they get margins higher in the future?
Yeah, they mentioned a few things. Scaling compute, obviously. Growing higher margin security products, especially API security. Delivery stabilizing helps too. And maybe some savings from real estate and using their own internal compute better.
Interesting. Did they say anything about U.S. government business?
They did. Said it's less than 5% of revenue right now. Expect maybe a small dip later in the year due to some federal cuts, but also see an opportunity if their solutions can save agencies money.
Okay. And one last point about reputation.
Ah, yes. They mentioned being named one of Newsweek's most trustworthy companies in America. See it as important validation, especially for customers trusting them with critical infrastructure.
All right, that covers a lot from the call. Now let's pivot to our not financial advice segment. Time for an outrageous but plausible trade idea based on all this. What do you have for us?
Okay, so here's a thought. You look at Akamai, right? You've got clear acceleration in compute, especially with cloud inference for AI. You've got the new AI Firewall tapping into a huge potential market. Security overall is solid. Leadership in segmentation, API security. Delivery seems to be finding a floor, maybe. And they're managing costs. So the maybe not so outrageous part is just being long Akamai, right? But to make it outrageous but plausible, how about pairing that long Akamai position with, say, a carefully selected basket of smaller, pure-play AI application companies?
Why?
The idea is these AI app developers need performant, cost-effective edge infrastructure like Akamai Cloud Inference to actually deliver their services, especially as AI gets more complex and latency sensitive. So if these AI apps take off, Akamai is a key enabler providing the picks and shovels.
So you're betting on Akamai directly and also indirectly by betting on the companies that will need its specialized infrastructure.
Exactly. It's a leveraged bet on edge AI adoption. Akamai benefits from its own execution and potentially from the broader success of AI applications built on edge platforms. It adds risk, definitely. It's not your standard play, but connects Akamai's specific strengths in compute and security to that massive AI wave. That's the thesis.
Definitely outrageous and plausible. Connects the dots in an interesting way.
Yeah.
Okay, that wraps up our deep dive on this earnings call. We've hit the results, dug into security, delivery, compute, and the outlook. Hopefully that gives you a much clearer picture.
Yeah, lots to unpack there.
Now, we'd love to hear what you think. What stood out to you? Any questions still bouncing around? Let us know online. And just a reminder, none of this was financial advice. Please do your own research.
Always.
Until next time on TalkTickers.